Okay, welcome to the property webinar, as I mentioned. So we're just going to kick things off with a bit of an agenda. So today we're going to talk about some IRD updates that are going to be quite useful for you as property investors, and go through some tenancy law changes. I'll go through some commonly asked questions. I have been getting quite a few questions over the past couple of weeks. I thought it'd be good to share some of the common ones. I'm going to give some advice around some considerations around your tenancies. Focus on how the bank can help. Often we might think of them as the enemy, but I think in this current climate, the bank could be there to help. I'll then open the floor for you to ask me any question you've got, presumably property related. And then I'll finish off with a few things to consider in closing. And then I'm really keen, if you're willing, is for you to share a few of your examples of what you're doing with your tenancies and what's working for you. Again, the more I think we can all sort of bandy around and support each other during this difficult time, the better. Just thought I'd start things though off with a bit of a poll, just to see in terms of the audience we've got today, whether you're invested in commercial or residential. The webinar is going to support both, but it's just it'd be good for us to actually see just who's got what. So on that note, not that one, there's a poll popping up, and just get you to click on the right answer and I'll share the answers soon. So it would appear that there's no one actually voting, which is a bit of a concern. Were you able to see the poll that was just launched? Maybe if you just put in the chat section whether you're actually able to see it. Otherwise, okay, didn't show. Okay, I'll see if I can relaunch that one, see if it works this time. Can you see it now? Yes, great. Okay, it's coming through now. Perfect. I'll just give it about 5 more seconds for you to click your answer in there. Okay, and I'll end that poll now. So I'm just going to share the results. Now, one thing I did find out from yesterday's webinars is that actually the poll results don't come through on the recording. Therefore, I'm actually going to talk through them. So just a heads up here, we've got 8% of people today commercial landlords, 42% are residential, and 50% of both. So it's actually probably quite a good webinar because we are going to focus on both. Okay. So firstly, I'm going to start with some updates, some ID updates, which are going to be quite useful, especially for you as property investors. So the first one, just for the commercial landlords, is that essentially from 1 April, so a few days ago, you can now claim depreciation on commercial buildings. It's got to be at a rate of 2% diminishing value. That's not available to residential landlords, just for commercial. And it is going to, of course, help increase your depreciation expense, which will actually help reduce your profit and therefore the tax payable. I would just warn though that in most cases, buildings, commercial included of course, actually go up in value. So if you've depreciated a building, and let's say you sell it in 5 to 10 years and you might have had, I don't know, 40,000 of depreciation that you claimed, you will need to pay that back when you sell it. It's called depreciation recovered. So it's very much a timing thing here. And it's aimed really from the ID to allow a bit of financial relief for commercial landlords in the short term, but you will pay that back. If you've got any questions on the depreciation and whether you should claim it, I can certainly have a chat with you offline about that. The next update from the ID is that for this financial year we're in now, which is the 2020-21 year, so starting the 1st of April 2020, if you buy an asset that costs less than $5,000 GST exclusive, you can actually expense that back straight away. In the past, it's been a $500 limit. So if you wanted to buy a stove or a dishwasher or a heat pump, in the past, they've all had to be depreciated, so added as an asset and depreciated over its useful life. For this year and now, anything up to $5,000 can be expensed. So I'd suggest a good chunk of those chattels will actually be able to be expensed. Which is really, really good. And it's really aimed at helping landlords in the short term be able to claim more back in terms of expenses, which then lowers their tax bill. It is just a temporary change though, so it's just for the financial year we're in now. from the 2021 financial year, sorry, 2022 financial year, getting confused there, which starts April 2021, the limit is going to be increased from the $500 it was before up to $1,000. But just a heads up, that $5,000 limit is just for the 1 year. But going forward, at least it's going to be increased to $1,000 from the 2022 year. Another probably key change really is that provisional tax threshold is increasing from $2,500 to $5,000 for the 2021 financial year. Probably not a big impact for commercial landlords because hopefully you're actually making a decent amount of money on your commercial properties. So just how that works is if your tax to pay at the end of the financial year is more than $5,000, then going forward you'll be a provisional taxpayer, which essentially means you have to pay tax throughout the tax year. It has in the past, up until this financial year, been $2,500. So I've found probably a lot of property investors who they're making, residential property investors who are making slightly less profit than the commercial investors. Perhaps your tax payable when you split the income with your partner was sort of around the $3,000 or $4,000 mark, which had pushed you in the past into provisional tax, but that threshold has now increased to $5,000 for the 2021 year and onwards. That is a permanent change. So just a heads up that some of you may end up not falling into that provisional tax regime. Of course, provisional tax is just paying tax throughout the year. There will still be the end of year tax. And if you haven't paid provisional tax, all the tax will be payable as terminal tax, which is payable 7th of April, 12 months after balance date. The last key change from the ID is that there is going to be no interest or penalties on tax due from the 14th of February 2020 for the next 2 years, if you can prove that your inability to pay the tax was due to COVID-19. So if you've got a tax amount due, mainly going to be terminal tax, potentially provisional tax as well. If you go into an ID installment arrangement, then the ID will not charge you interest or penalties. Just a heads up, you have to go into an installment arrangement. You can't just choose not to pay the tax. And the installment arrangement will be making you pay installments weekly or monthly. It's not a case of just being able to defer the tax for a set period of time. You will need to enter into a payment arrangement. But I would suggest it's actually quite a good option if cash is a bit tight. It's a good way to defer those tax payments. Okay. So just a heads up, if you've got any questions or any of those things, just click in the Q&A section and type a question or raise your hand, and I can answer the question as we go. You probably all heard some government changes to the tenancy law that have been, wouldn't say rushed through, but I guess they're put through fairly quickly. Certainly no consultation with landlords on this one. The first one is the rent freeze. So from the 23rd of March 2020, a landlord cannot increase the rent for a period of at least 6 months. So, and the key is that actually even applies if you had pre-arranged to increase the rent after the 23rd of March. Let's say you gave your 60-day notice and rent was supposed to increase on the 24th of March 2020. That cannot go ahead. That will need to be deferred for 6 months. So really important that you don't try and increase the rent now, because a tenant can actually go and complain to the tenancy tribunal, and you can be fined up to $6,500 because it is a breach of the Residential Tenancy Act. So please make sure you don't go ahead with any rent increases for the next 6 months period. The other key change, possibly probably even more restrictive for landlords, is that the government have really tightened up on how to terminate a tenancy. And from the 23rd of March 2020, for the next 3 months. Now, notice that the rent freeze was for the next 6 months. The termination restriction is for the next 3 months. Apparently, in coming up with these changes, the government realised that this was quite restrictive on landlords, and given there was no consultation, they've only made this for the next 3 months. They were, of course, talking before COVID-19 about really tightening up on the ability to terminate a tenant. So I would suggest probably even after the 3 months is up, there could be some more permanent changes to the ability to terminate a tenancy. So the key thing is now you can still terminate a tenancy during COVID-19 or for the next 3 months, but there's real restrictions around it. So you can do it if a tenant substantially damages the premises. You will, of course, need proof. And that's fairly difficult to get in COVID-19 since you shouldn't actually be going around to see your premises anyway. If the tenant assaults or threatens to assault the landlord, their family, or the neighbours, you will need to lay a police complaint in order to hold that one. if the tenant abandons the property or engages in significant antisocial behaviour. That's it. I mean, the abandons of property should be somewhat easier to prove. The antisocial behaviour really actually requires your neighbours to lay a formal complaint, which from, I guess, talking to my clients and talking to a few other landlords around the country, most neighbours are actually not willing to lay a formal complaint. They might ring you up and say, hey, the tenants threatened me, or they're doing loud parties till all hours of the morning. But most of them won't actually go ahead and put that in writing, which is what you would need in order to cancel the tenancy. The other thing is, if the tenant's 60 days behind in rent, it used to be if they were 21 days behind, you could actually serve a 14-day notice period, whereby you can require them to catch up on the rent within 14 days, or you can apply to the tenancy tribunal. So just with that, that's 60 days, that is 2 months. So that could be a potential issue, I guess, for landlords. I mean, 2 months without rent is quite a long time. I mean, some might say, well, look, we've got 4 weeks bond, and hopefully you have got the 4 weeks bond from the tenant. Just bear in mind, though, that let's say they do get to 60 days and you apply to the tribunal to have them evicted, that might take a further 2 weeks by the time you get to tribunal. And if they damage the property, then then essentially your bond is going to seem pretty small in amount in relation to the amount that the tenant owes you. So my recommendation, I'll get onto that shortly in the webinar, is just making sure you try and stay in communication with the tenant and make sure that rent doesn't get anywhere near that 60 days. Otherwise, it's going to be quite an effort to get the money back. You might end up getting an instalment order from the tenant, which you get paid back $10 a week, which, I mean, whilst it's paying back the debt, it's not really going to help you pay your mortgage. The last way to terminate a tenancy, and I guess it's fairly obvious, and hope it doesn't happen to you, is if the sole tenant dies. I guess that's a pretty good excuse to end the tenancy, and so you can end it in that case. So as I mentioned, I have been getting over the past 2 weeks quite a few questions, and a few of them are the same, so it's quite good, I think, just to go through some of the questions I have been asked. So the first one is, should I apply for a mortgage holiday? We'll get into mortgage holidays later in the webinar. My initial opinion, though, is try to avoid a mortgage holiday wherever possible, purely because it's not really a holiday. As you're probably aware, it's where you stop paying principal and loan repayment, or loan repayments are both principal and interest. The key is that the interest does continue to accrue on the mortgage. So in actual fact, at the end of the mortgage holiday, your loan has increased during that period. I did read a stat that if you've got a $500,000 mortgage at a 4% interest rate, then essentially a 6 months mortgage holiday adds $15,000 to your mortgage, essentially because you've got interest accruing, and then there's interest accruing on the interest, the whole compounding interest. So I would just suggest to be mindful about taking a mortgage holiday. I do appreciate that in some cases, if cash flow is tight, maybe your business is down, or your employment is sort of in jeopardy at the moment, then absolutely explore the mortgage holiday option. I would suggest, though, if possible, to go interest only if you do need to reduce your mortgage payment. But we'll get into that further in some of the further slides. Another question I'm asked is, my tenant has asked for a rent discount. How should I respond? This is really, I guess, depends whether it's from a commercial or a residential point of view. I'll start with residential first. In my opinion, you should not be giving discounts for residential tenancy, because at the end of the day, the tenant is actually still in the property and is actually using the services that they're paying for. So you may need to give a rent deferral. For example, let's say your tenant's lost their job and they can't afford to pay the full rent. I certainly think you should negotiate with them on that, but you really want to make sure, let's say the rent's currently $500 a week, maybe get them to pay $400 a week and defer that $100 that they've short paid. It is not a discount. You have to make it very clear to your tenant that it's not actually a discount, and they will have to catch up that $100 a week in the future. I will go through some tips on what to do around that later on in the presentation. On the commercial side, the tenant can quite, in their rights, ask for a discount. I will go into that shortly around some of the legal side of that. But if the property is not available for the tenant to use, they've actually got a legal case that they don't have to pay the full rent. So in that case, that will actually be a discount, as in whatever is short paid in the month will not need to be caught back up. And I would strongly suggest that you discuss that with your tenant to make sure it's a fair outcome. Really, both realising that both the landlord and the tenant are probably in a pretty bad situation, and it makes sense to try and sort of meet somewhere in the middle to keep that relationship intact. I'm getting a few questions coming through. What I'll do is I'll just answer these commonly asked questions, and then I'll jump into the Q&A section and answer the questions that you've just asked through now. Next question I get is, my tenants told me they can't pay any rent. Unfortunately, we are getting a few clients saying that. My recommendation in the first instance, if they can't pay any rent, is for them to approach MSD and try and get an accommodation supplement. If they've lost their job and they can't afford to pay rent, in some cases, MSD can come up with an accommodation supplement. So essentially, WINS will pay the rent to you directly. Naturally, that's good for the tenant. They don't fall behind, and it's great for you because you get paid the rent. So that would be my first port of call. If they can't get any funding from MSD, and the reality is you can't actually pry into why they can't, because there could be other circumstances. If they can't get an accommodation supplement, then my advice is then get them to pay as much as they possibly can and then defer the rest, as I mentioned before. If they don't pay the 4 weeks rent for 4 months, I think you'll have a lot of problems down the track to try and get them to catch that up. Because bearing in mind, to catch up, they've got to continue to pay the weekly rent, and then on top of that, catch up the underpaid rent from previous weeks or months. So my strong advice there is make sure if you've got a residential tenant, they pay as much as they can. On the commercial side, that's going to be a real negotiation. If in some cases, let's say you've got a cafe that's closed, a lot of them are struggling, and they're struggling to actually pay any costs over and above the wages, which of course the wage subs is helping them with. I'd suggest on the commercial front, sit down with them, obviously not in person, maybe over video or over the phone, and just try and see what they can pay to make sure you are getting something paid off, because of course you've got a mortgage to pay. Next question I get is, my tenant has told me there is a rent freeze, so they don't have to pay any rent. Is this true? So of course, as I mentioned in my previous slides, the rent freeze actually applies to the inability to increase the rent for the next 6 months. It is not the ability to stop paying rent. I do see a few forums on Facebook or some other blogs where one person is saying the rent freeze means that you don't have to, as a tenant, don't have to pay any rent. That's miscommunication. I guess that is going to happen. That is not the case. That is absolutely not the case. Really important you point them to the tenancy services, and it'll actually show on there that the rent freeze refers to the inability to increase the rent, but the current rent is absolutely still due. So sometimes the tenant won't listen to the landlord, so you might need to point them in the direction of tenancy services. I mean, naturally, I'm more than happy if you want to get the tenant to contact me. They probably won't, but I'd point them to tenancy services website on that front. Couple more common questions I get. This is all getting too hard. Should I just sell my rental properties? Look, I think it is a really difficult time at the moment. There's a lot of stress going around. And naturally, if let's say a tenant's not paying the rent, it's just another stress to add to the pile, which can get really, add more stress in the situation. My recommendation is, if you can avoid selling your rental properties, you should, because at the end of the day, it's a really good investment. Over time, property does go up. If you actually can't afford to continue paying the mortgage, as I mentioned, you can look at taking a mortgage holiday or going interest only. I would recommend, if you are thinking of selling your properties, give it some time before you make a decision. At the end of the day, property prices may well go down through COVID-19, and therefore selling a property at the bottom of the market is not going to help. You are going to, miss out on potentially what you could have got in terms of sale price if you were happy to wait a bit longer. But I think in the first instance, give it some real hard thought and then give me a call, because I think it's really important that you bounce that idea off you, because essentially selling the properties in the current climate probably isn't your best option. But I do appreciate in some cases that could be an option you're looking to pursue, and may well be the best for your circumstances. But please, just think about that and then give me a call. Last question is, what impact will COVID-19 have on property prices? Look, that's really hard to predict. I mean, there's plenty of economists with different opinions. That's nothing new. Usually if you ask an economist, you'll get 20 different answers. The general consensus is that property prices won't increase during COVID-19. They may well decrease. Some are saying they might just kind of hold their value. You'd have to suggest there might be a couple of people, mum and dads, who have got their family home that can't afford to continue paying the mortgage. Maybe they've lost their jobs and then can't get another one. You might find a few more properties come onto the market because people are forced to sell. In theory, that's the whole supply and demand. If you remember your economics days, in theory, with more supply, then that's actually going to decrease the value of houses on the market. That's probably would be my impact. I think you will see a few people having to sell their home, and therefore property prices will probably, I think, possibly decrease. They may stay the same. I certainly don't think they'll be increasing in the short term. But as with anything, if you can hold on to your property during this tough time, it's almost guaranteed that property prices will increase in the future once we get the economy back on track. I'm just going to jump into a few of the questions that have come through. So thanks, as I said, this is a interactive webinar. So really keen to make sure you ask your questions, because again, if you've got this question, it's quite possible that someone else will have the same question. First question I've got is, could an executor terminate a tenancy so a residential property can be sold in the next 3 months without tenant? Well, that's a great question to start with. So my understanding is that you cannot evict anyone in that situation, even if you want to sell the property, or if you want to kick the tenant out, move the tenant out and move into the house yourself, you can't actually do that. I probably would need to come back to you on the exact specifics around that, because it is a very technical question. But my understanding is that essentially there's actually no ability to remove the tenant from the property unless it meets one of those criteria I went through before, even if you want to move into the property yourself, which is a bit of a change from what the rules previously were. Next question I've got, is it true if you discount rent, then you can't increase it back up to the normal rate once lockdown is over? Presumably that is based on the commercial front. I'm hoping it's not a residential question. As I said, I would strongly recommend you don't discount the rent. On the commercial front, absolutely not. The rental agreement you've got in place is going to govern what the rent is. If you choose, or if you negotiate with your tenant to discount, which I think you probably need to on the commercial side, then once the lockdown is over, it will go back to the standard rent. Really important, I think, when you are coming up with the discount agreement with the tenant, you make it quite clear this is actually just for the next 4 months. What I'm recommending is that actually initially it was for the period that alert level 4 was in place for. Of course, that could then, if it does drift out to 6 weeks, hopefully it doesn't, then in theory, I guess you'd keep the discount in place for them. But most of the arrangements I'm seeing are that the rent will increase back to its usual level once we're out of alert level 4 and people can start using their premises. It may need to be considered for perhaps some of, like, say, a hospitality business where there is a risk that they can't actually trade because Jacinda may well have some rules around public gatherings. And in that situation, you may need to, I guess, on negotiation with the tenant, keep the rent lower for a bit longer. But the initial rental agreement you've got is going to govern the amount of the rent that's been charged. So essentially, once these agreed upon discounts come to an end of their term, then rent does go back to its usual levels. Right, okay. If my tenant tells me that they can't pay any rent, can I kick them out? No, you can't. Unfortunately, you cannot kick them out. You cannot apply to the Tenants Tribunal to kick out a tenant until they are 60 days behind. So in that situation, I would suggest trying to get them to pay as much as they possibly can, and as I said, defer the rest. If it gets to the point that the amount they've fallen behind in is 60 days or more, you can apply to the tribunal to remove the tenant from the property. It's hard to know whether they'll actually do that if we are still in lockdown. I mean, hopefully lockdown only lasts for 30 days, so it won't be an issue. I have heard reports, because I do belong to the Wellington Property Investors, and we have a direct connection with New Zealand Property Investor Federation president. And they have said that their understanding is that the tribunal will not kick a tenant out during lockdown. So even if it was 60 days, and hopefully lockdown doesn't last for 60 days, but just be mindful there's every chance that if we did go back into lockdown, then a tenant will not be put on the street during lockdown, just because it's really hard for them to find somewhere else to live. But in the situation, tenants said they're not paying their rent, I would strongly recommend you talk to them to try and get them to pay something. I appreciate if the tenant puts their foot down and goes, nope, I'm not paying rent. They've probably read the Tenancy Services website. They probably think they can maybe play the game. Hopefully it doesn't get to that point. But if that is the case, all you can really do, unfortunately, is wait 60 days and apply to the tribunal. One would suggest if the tenant has just refused to pay rent, the tribunal will certainly rule in your favour. and hopefully they can evict the tenant. But again, if it's in lockdown, that could be tricky. Are there any other questions? I've just gone through all the ones I've been asked. I'll just maybe give you another, say, 20 seconds to come up with any more questions, and then I'll move on. Okay, looks like there's no more questions at this stage. As I say, keep your questions coming through, and I'll do my best to answer them. Okay. So just really wanted to focus on mental health quickly. I have brought this up in all my other webinars. I think it's really important. You know, a landlord can certainly be stressed as well. It's a difficult time for everyone. The key is that during the lockdown, during the whole COVID-19 situation, you're not alone. Certainly I'd recommend, if you are finding it difficult, reach out to family, reach out to your peers if you can. I would recommend get into a regular exercise routine. That certainly works for me, but it depends on what really relaxes you. Maybe it's yoga, maybe it's going for a run around the block. Certainly don't go further afield and go to the local mountain biking park like David Clark. But do what's going to, I guess, keep you as less stressed as possible. And I do recommend, especially if you've got kids at home, have a daily routine. With younger kids, they can add a bit of extra stress. Obviously, you love them, but they can add extra stress. And it's quite good for kids to actually have a routine as well, so they know what's happening. Hopefully that it does include perhaps a bit of screen time for them, so you can have a bit of time out to yourself. But I think the key is just make sure that it is a stressful time for everyone, and it's okay to be feeling down or stressed. Maybe you've lost your job, or perhaps one of your partner's lost your job, or there's a lot of reasons to be stressed. So just make sure you do look after yourself. Certainly applies to landlords as well. I mean, the example given before, if a tenant refuses to pay rent, that is undoubtedly going to add to your stress levels. So really important you reach out and don't try and bottle it up. I have just had a couple of questions come through, so I'll just go and answer those now. Question is, I wonder if a residential tenant not paying any rent is better than a small amount in terms of the 60 days. Yeah, that's probably a good question. I guess the question there is, if they're paying $100 rather than the $500 weekly rent, you'd almost be best just to kick the tenant out. Yeah, look, I think the key is, if they're only paying $100 rather than the $500, it's probably going to be pretty difficult for them to catch that back up. If the amount of deferment reaches 60 days, which it probably would, maybe in, say, 90 days if they're only paying, not even that, would be like sort of 70 days if they're only paying the $100 out of the 500. At the end of the day, if the tenancy is cancelled or stopped and the tenant has to move out, they will have to pay any rent arrears. So my recommendation there is, I think in the lockdown, especially during COVID-19, probably anything you can get from the tenant is better than nothing. But I completely agree, if they're paying very little, I'm not trying to sound defeatist, but it would be very difficult for a tenant to catch up, say, a $400, if they're not only paying $100 out of $500 a week, for them to catch it up post COVID-19 or the lockdown is going to be pretty difficult. So as soon as that amount deferred gets to over 60 days, you can apply it to the tribunal. Question here is impact on buying property. Okay, so that's a good question. We have been advised through my legal contacts that property settlements are going to be deferred until 10 working days after alert level 4 is lifted. So of course, there's actually no firm date on that. I mean, in theory, lockdown or alert level 4 is going to last for 4 weeks. So in theory, 10 working days after that. We have had a few clients who have been impacted by this, where they've actually had a settlement that was supposed to go through during lockdown. Look, if they've actually drawn down the loan for that, then in actual fact, they're out of pocket, because maybe they've had a plan on a tenant being in there. So that's not fantastic. Difficult to know really what to advise in that situation, because if the vendor essentially, is sold the property, they're not going to use it anymore, maybe they've run out, and then they're selling to the purchaser, they don't want to have to pay you any interest for the fact that you've got a house that you can't use for, let's say, 10 or 20 days. So the vendor is not going to want to come to the party. So in that situation, it's almost as can be a bit of bad luck unless your lawyer can negotiate something with the other party. but yeah, that's lockdown level, alert level 4 has definitely impacted a few property settlements. Unfortunately, at this stage, there's not a lot that can be done about that, apart from I've been instructing your lawyer to settle definitely within that 10 days, hopefully sooner, in terms of after lockdown or alert level 4 finishes. Another point there, I think, was actually just a further comment on the other question, is that you can't go through a property, for sale, can't get a limb, etc. How do we make this work? Yeah, you can't get a building inspector to go around either, from my understanding. So essentially, it's just, I guess, it's going to put a bit of a hold on buying and selling property. Certainly can't do open homes. My recommendation would be you wouldn't want to just buy a property straight off Trade Me. You want to go and check it out, get a building inspection done. So I think, realistically speaking, it's just going to have to put a hold on your property buying activities until alert level 4 is lifted. Okay, we'll just go back to the rest of the slides. So here's some residential tenancy considerations, which I would advise to you all from a residential point of view. I think it's really important that you get in contact with the tenant to see how they're doing. And that's really on the basis that if they are struggling, you probably want to know that they're struggling sooner rather than later. You can certainly advise them to go and talk to MSD to get the accommodation supplement. But I think it's important for you to know that maybe they've paid rent this week and maybe they'll pay it next week, but in actual fact, they find that pretty tough. So maybe in weeks 3 and 4 and 5, they're not going to be able to pay the full amount. I think you're best to know whether they're struggling, and then maybe agree as soon as possible that there won't be a discount of rent from a residential point of view, but there will be maybe a deferment, and you want to make sure that deferment's as high as possible, as I say. I think just waiting for tenants to get 2 weeks behind is probably not your best option, because you'd rather they paid something rather than nothing if they can't afford to pay the full amount. As I mentioned, MSD can provide an accommodation allowance in certain cases. I would strongly recommend you talk to your tenant about approaching MSD. As I said, though, unfortunately, if they come back and go, no, I've been denied the accommodation supplement, it's actually a privacy matter and you can't ask why. So you've just really got to take that on face value. As I mentioned before, don't give discounts, but maybe offer a deferral. When I say don't give discounts, if there's a really good tenant and you want to keep them happy and you've actually got the ability to give a discount, then by all means do. But it's not really, I guess, my go-to advice. Like, you're running the business as well, being a residential landlord. So certainly talk about the deferrals. And in most cases, if the tenant can't pay, you've got no choice but to offer a deferral, because you certainly can't evict them unless they get 60 days behind. But of course, be mindful, the bigger the deferral, the longer it will take for it to be repaid. So the example I gave, if they're paying $500 a week currently, and they can only afford to pay $100 a week, so they defer $400, let's say that goes on for a period of 4 weeks, they're going to fall $1,600 behind. Look, if they're struggling to pay the weekly rent as it is, then they're going to struggle to pay off that amount that's been deferred. So if they're paying you back at $10 a week for the next plenty of weeks, it's not really going to be a situation that's going to work well for you. You've, in theory, still got a mortgage to pay, and you can go on the mortgage holiday. But I think you'll find if landlords get a bit too generous with how much can be deferred, I think you'll find that the arrears will be going on for quite some time. Yes, you can take it out of the bond. You absolutely can. But again, if the tenant leaves the property and they've left some damage behind, then that bond really is for that. Okay, just move on to the commercial tenancy consideration. So most of you as commercial landlords may well have been approached by your tenant already, or you probably would have heard in the news that there is a clause in the standard lease agreement. It's clause 27.5. And when I say the standard lease agreement, the Auckland District Law Society agreement, from what I've been told, about 75% of all commercial leases are based on the Auckland District Law Society agreement. So the key clause is 27.5, dealing with no access in emergency. Essentially, I'm not going to read through the words on the slide, but essentially, if the property during a plague or an epidemic, and apparently the COVID-19 does fit that criteria, and therefore the tenant can't go into that property, and of course during lockdown, Jacinda's made it clear you can't go into your commercial properties unless they're for essential services. Then essentially the rent has to be reduced, and it has to be. It's law by a fair proportion. And that's rent and outgoings, just to be clear on that. So the outgoings actually include things such as landlord insurance if they're passing it on to you. If the landlord's passing on the rates to you, it depends on the lease agreement. But essentially, if you are paying, if you are getting your tenant to pay rates and insurance, then that portion of rates and insurance has to also be reduced during the time that the tenant can't access the property. Not all agreements have this clause, so I would strongly recommend as a commercial landlord you check to see whether your agreement does have that clause in it. The $1 million question though really is, what does a fair proportion mean? And from legal advice I've received, it does actually depend on the property. If you've got a cafe where clearly the tenant can't use the property at all, then they've been significantly impacted. And I've actually seen situations where some landlords are given 100% rent discount for the period of lockdown. Some going sort of 25%, some going to 50%. A storage facility, however, essentially, if the tenant's not actually going to use that storage facility during the lockdown, they've not really been impacted at all. So in that situation, you may not need to give any discount, or the discount given will probably be a lot less. For an office building or a cafe or a retail shop, it seems at this stage that I'd say 50% is probably the minimum discount that you need to give. The landlord, the tenant can, of course, get legal action and try and pay as little as possible. As a landlord, of course, you want them to pay as much as possible because you've got a mortgage to pay. My strong recommendation on the commercial side is negotiate with the tenant. You really want to keep that landlord-tenant relationship intact if you can. I know some of those relationships can be quite strained. But I think the key is just try and negotiate something that's going to work for you both. Look, the tenant's probably struggling because their business isn't operating. You're struggling because you've actually got a mortgage to pay. So I think just meeting somewhere in the middle, whether it's a 50% discount or even maybe you can go higher than that, depending on what you can do. But bearing in mind that if the tenant wanted to play hardball, I'd suggest that if they got a lawyer involved and they basically can't use the premises, they're probably going to get more than a 50% discount if they got lawyers involved. Of course, that's going to cost them money from legal fees, so they probably don't want to approach a lawyer. But I think you do need to be somewhat mindful if you're a commercial landlord. Also, bear in mind that it may be very difficult to find a new tenant from a commercial sense over the next few months. A lot of businesses are probably going to have to shut down due to COVID-19. In theory, that's going to actually bring a lot of commercial spaces on the market. And so therefore, if there's a lot of vacant spaces, it could be very difficult to re-rent your property. So I would suggest it's probably easier to keep your existing tenant in place rather than sort of play hardball, make them pay high rents just for the tenant to go under and, of course, leave. So I think the key is communication there and try and meet somewhere in the middle. I have had some great stories come through where landlords have contacted the tenant straight away, agreed 50%, tenant's happy, landlord's happy. It was done before they were prompted, so it really has helped, I guess, build or improve on the relationship between the tenant and the landlord. And I think that's a relationship which, for most of you experienced commercial landlords out there, it's certainly a lot less stressful if you do get on with your tenant. Look, you won't always. I think like most things, you won't get on with everyone. Some tenants are pretty unreasonable. But I think, if you can build that relationship up and keep it, strong, then it's going to help you in the long run. At the end of the day, it's in your interest that your tenant stays in business. And given rent in most cases is a business's second biggest expense, they are probably going to be struggling if they've got to pay a decent chunk of rent while their business is closed. Okay, so when it comes to helping the bank help, so I guess in some cases that you can have a very love-hate relationship with your bank. My recommendation is that you do get in contact with your bank if you are struggling, just to see what they can do to help. The two main options they're going to advise is the mortgage deferral. See, I've crossed out the word holiday because, and I'll get into it shortly, it certainly isn't a mortgage holiday is not a holiday. You are, of course, still accruing interest over that time. Another option could be interest-only loans. Of course, with interest-only loans, it depends really on how much of the usual rent payment your interest forms. If you've just purchased a property and you've got it highly geared, there's actually a good chance that the interest forms 95% of the mortgage payments. In actual fact, going interest only, it won't really help. But potentially, if you've actually paid off a bit of the loan and the principal forms a decent amount, I would strongly recommend interest only over a mortgage deferral. I mean, naturally, if you can continue to pay principal interest as per usual, then that's fantastic. If you can't, definitely try for interest only before a mortgage deferral. So the banks have actually been instructed by Reserve Bank and by the government that they do need to pretty much guarantee that they'll offer the mortgage deferral interest only in all situations. So when you talk to the bank, you can almost guarantee that they'll offer one of these options. But I think if you are struggling with your finances, definitely talk to them sooner rather than later. Just wanted to touch more on the mortgage deferrals there. Again, I don't like calling it a holiday. Essentially how it works at the moment, and this is what the Reserve Bank and the government have got banks doing, is that you can stop your loan repayments for a period of between 3 to 6 months. It hasn't pushed beyond that yet, but I do believe the government will intervene if the COVID-19 lockdown lasts longer or if business or the economy is impacted. So the bank will guarantee that they will stop your loan payments for 3 to 6 months. As I mentioned, though, interest does accrue on the loan, so it's not a holiday. That example I gave before on a residential loan, $500,000 loan, 4% interest rate. If you defer your mortgage for 6 months, then essentially you actually add in $15,000 to that loan, which, again, that's not ideal. I appreciate if you have to go with the mortgage deferral, then that's, you have no choice. But just bear in mind, you will be going backwards on your property. Interest only, as I mentioned, it's a much better option if you can afford it. But as I said, if interest forms a good chunk of your mortgage payments, maybe you need to go for the mortgage deferral. Right, well, this is getting close to the end of the webinar. I am available now to answer any property-related questions you've got. When I say answer, you can simply ask me the question. Hopefully, I can answer them. But I'll just open up the Q&A section for the next, say, 30 seconds. Also, if you did want to get me to turn your mic on and you ask a question, just put up your hand on the button below and I will turn your mic on. So I'll just leave it for 30 seconds for you to ask any property question you've got. Don't be shy. Okay, so I've got a question. When will the standard rules for residential tenancy come into effect? So the standard rules, by that, I'm assuming the person means the ones that Labor were mooshing about releasing. Essentially, that was going to limit the ability to evict tenants, pretty similar to the rules that they've put in place now. So as to when those permanent rules will come into effect, it's hard to know. There is some people saying they'll basically come into effect right at the end of the current kind of COVID-19 rules. I think one thing's for certain under the Labor government, it's going to be a lot harder to evict a tenant, which the New Zealand Property Investor Federation have certainly pushed back on some aspects of that. But at this stage, it does appear that Labor are not going to budge. I know that Chris Farfoy, the minister, was keen to push those rules through pretty quickly, but of course, with COVID-19, they've had to change track and essentially do these emergency rules for COVID-19. But my thoughts on that would be that the permanent rule changes will come into effect, I would suggest, this year. As I said, they were pretty close to releasing them, despite some pushback from the landlords around New Zealand, including the New Zealand Property Investor Federation. So I reckon that you'll see a lot more restrictions around removing a tenant from the property, I'd say permanently by the end of this year. Another question is, going forward being election year, are you aware of any opposition policies that will benefit landlords rather than the current policies? Really good question. We actually had Judith Collins come along to the Wellington Property Investors back, would have been, I think, October last year. She was making a lot of promises around how they'd repeal this and they'd make it easier for landlords. I'm not really too sure, I guess, whether Labor would look to stake their campaign on the landlord side of things. One, I guess you've been cynical. One school of thought is it's very easy for Labor to put these policies in place, and then National actually choose to not repeal them, but say, look, we didn't put them in place. My gut feel would be that there won't be a lot of changes to the residential tenancy rules or commercial rules, for that matter, if National got into power. That may be driven by Judith Collins, though. As I mentioned last year, she was sort of saying a few things. For example, she would scrap the capital gains tax, which of course never got put in place anyway, although there is, of course, the bright line test. Look, I think you'd have to ask National about whether they would make it easier to evict tenants if Labor's rule gets put in place. But I don't personally think that there'll be any major changes from National at this election. I'd suggest right now they're probably trying to work out how they're going to have any chance of winning this upcoming election, given that Cinder has done quite an amazing job with COVID-19 and, of course, the mosque shootings last year and the eruption this year. So I would imagine that they've probably got their thinking caps on about how they're going to make a difference. I don't think you'll find it'll be on housing, but that's just an opinion. Right, one more question we've got here, but keep them coming in. Is there likely to be a slowing in property development, new builds for a while until COVID-19 issues cease? Example for the next 12 to 18 months. Look, I think it's a good question. At the end of the day, if Jacinda closes the borders for the next 18 months, which initially she's talked about doing, what you will find is that a lot of people won't be coming into the country. We have a lot of migration. That, of course, brings more people into the country, and there's a higher need for properties to be built. That is going to slow. There's still a lot of people looking for a house. So there will still be some demand for new property development. But I would suggest the fact that the migration or people immigrating to New Zealand will slow down or be pretty much non-existent, by definition, then you'd have to assume that property development would slow down. I still think property developers have got a place in the market. People still need a house. Not everyone is going to be impacted by COVID-19, but I think, yes, to answer the question, I think it will slow but not stop. Okay, if you get any more questions, please just fire them through. I'll just give it another, say, 30 seconds before I move on. Right, no further questions. I'll just continue on with the slides. Again, though, if you've got questions, just keep firing them through. Okay. So I just want to, I guess, towards the end of the seminar, just focus on your investment strategy, because I think it's really important that you remember what your strategy is during these tough times. Just like anything, you're going to have good times and bad times. Probably right now is a bad time. But I think just really focusing on the key aspects of an investment strategy. Now, they are individual. I'm not going to go into individual, strategies with you all, but I would urge you all to have your investment strategy and have a think about it. More than happy to kind of talk through your individual investment strategy over time. Firstly, I think you want to think whether you're going to invest in commercial or residential. I mean, from a commercial point of view, often higher returns, higher risk. I would suggest probably more commercial landlords are impacted during this time than residential landlords, because a lot of businesses are actually struggling out there. Whereas from the residential point of view, everyone still needs a house to live in. Yes, some of them can't afford to pay the rent, but that really is a good example then of the risk return you're looking for in your commercial and residential. You can, of course, always have a balanced portfolio where you've got both. On the property side, are you doing property development or are you doing rental? You can, again, do both. So property development, obviously buy land or buy a house and do it up and sell it. I personally think that's almost a full-time job on the property development side, making sure it's built as quickly as possible, and then you've actually got a market. I've got a few clients who are just actually amazing at walking into a property and going, right, if I change that, and change that, I can get $40,000, and then I'll get $100,000 extra. It is definitely a skill set you've got to develop. Because I think with the way things have gone over the last couple of years, a lot of people have entered the property development market and potentially haven't added the value to the property they were looking for, or they haven't got the price at the end of the day they're looking for. So they've actually put a lot of work in and not made a lot of money back. So I think it's something, if you want to get into property development, definitely make sure that you've got the time and resources to put into it. Of course, you may have a balanced portfolio with development and rental, but important to know where your portfolio sits and what you're looking to achieve. Location's important too. Like anything, not putting all your eggs in the one basket. The Canterbury example of the earthquakes back in 2011 are a good example there. I think I heard the stat that about half the rental properties were red stickered, so they couldn't be inhabited by tenants. So what that meant is that those that were red stickers, obviously there's no rent coming in. In most cases, insurance policies only pay out 12-month maximum of lost rents. I had heard the average time to rebuild a property in Christchurch was about 4 years. So there was essentially at least a 3-year period where if you owned a rental property that was red stickered, you were not getting any rent, still had a mortgage to pay. For those landlords, though, that the property wasn't red stickered, they were pretty much doubling the rent they received. So, and it wasn't, I think, them being deliberately doing it, but literally they'd hold an open home and 80 people would turn up and more people would say, look, I'll pay you double the rent if you give me the property now. So pretty hard to turn that down. But it kind of showed that if you had all your houses in Christchurch, you were either very lucky or very unlucky. And for that reason alone, I think it's quite important you do spread. If you've got a portfolio of properties, you do consider maybe having them in different locations. Naturally, the further afield they are, probably you need to get a property manager. Maybe you've got a property manager anyway, but you really can't manage your property if it's up in Auckland or down in Dunedin. Another one around your investment strategy, you should be looking at your cash flow positive versus capital gains. A good example of that is that potentially a block of flats is usually quite cash flow positive because so you've got 3 flats all in the same title. You've got 3 incomes coming in there. Often though, the capital gains on those properties aren't as high. Usually they are in a sort of a lower socioeconomic area, and so you're not getting the capital gains, but often you're going to get some good cash flow from that. Whereas if you wanted to sort of focus more on capital gains and having houses in, I guess, more affluent areas can often be the better way to go. But it's just a one tendency, so you may not make as much from a cash flow point of view because the house is going to cost you more. So really making sure you've got your strategy around that. And a really important, probably the last one, and people often don't think about it, is what is your end game? So look, you can't hold property forever. Well, I guess you could until you move on in this world. But maybe that's the case. You want to pass on your properties to your kids, or maybe you want to get to retirement age and then perhaps sell off a couple to free up some cash to go traveling or whatever it is that you want to do. But I think the key is to actually know what your end game is going to be. That's a really important question right now because maybe some of you are struggling a bit with paying the mortgage and saying, well, look, I don't know if I can stay in and keep my property. If your plan was to keep your properties until you're 65 or whatever retirement age will be when you get there, then obviously selling the property right now is going to go against your investment strategy. Now, that's not to say you simply can't do that, but I would sort of recommend, right, hey, now is a difficult time, but my plan is to have properties when I'm 65, maybe sell a couple off, keep some passive income coming in retirement. So if I sell my properties now, I can't do that. So you're not going to go into specific details. Hopefully you've all got an investment strategy when it comes to property. If not, I would recommend sitting down and having to think about it. Look, if we're in lockdown, you have been impacted from your job point of view, arguably you've got some time now to sit down and think about some of those things. More than happy to talk through your investment strategy with you as well. But I would recommend if you haven't got one, then have it creating one. If you have got one, maybe now is a good chance to kind of pull it back out of the drawer and revisit it. Okay. Just a couple of things in closing then. Really important, I think you remember that in the long run, property has proven to increase in value. There is every chance during COVID-19 that your property decreases in value. But the reality is we will get through this. We've got really good leadership at the moment. The world will recover from COVID-19. As to when, that's uncertain, but we will get through it. So in the long run, it's almost inevitable that property prices will increase. So essentially, if you've got a property now and you're struggling to hold on to it, I would suggest try and do whatever you can to hold on to it. Because again, if you sell in the downturn, then you actually crystallize the potential loss you've made. And what I mean by that, let's say the property now is worth $800,000, what it was heading into COVID-19. Let's say it drops to 750,000 in say 2 or 3 months' time due to COVID-19. If you sell now, you've essentially lost $50,000 because you've sold at the bottom of the market. Same thing happens in the share market. When the share market crashes or reduces, which it has done with COVID-19, share prices go down. All the big investors, like your Warren Buffett, he's big on this. He's all about buying shares when the market is down because the share price is low, and then basically riding out the downturn. And then when you get out of the downturn, you've got those shares, but they're worth more. Same thing in property. If you can ride out the downturn, your property will almost inevitably go up in price. So it's just a waiting game. But of course, we do appreciate at the same time, if you can't pay the mortgage, you need to think about your options. But I would strongly recommend trying to hold on to your properties where you can. And for those of you who are feeling rather buoyant, as I mentioned with Warren Buffett, he's looking to buy shares when the share price is down. This could actually be a good time for you to buy your next property. Prices probably won't be increasing. As I say, some may be decreasing. I think you'll find a few people having to sell their house, their family home, because they can't afford to buy it. Look, not suggesting you take advantage of their misfortune, but if they're putting the property on the market, someone's going to buy it. So maybe this is actually the time to buy your next one. I would just suggest, though, if you're going to buy the next one, just factor it into your investment strategy that we've talked about before to make sure you're not just buying for the sake of buying. Make sure it fits into what you plan to do. Okay, well, really keen now. If hopefully you're willing to share, you can either share on the chat button or you can raise your hand. I can turn your microphone on. I'd be really keen if you could share just what it is that you're doing with your property portfolio during COVID-19. So I'm going to open it up. Please, fire through in the chat section or, raise your hand. Be really keen if you could share some ideas about what you're doing. So I'll just, give you maybe 30 seconds to raise your hand or put something in the chat box. Okay, looks like there's nothing to share. That's all good. Look, understand you probably don't want to jump on and share what you're doing. There's no problem there. I have had one more question come through. It's not really a question. It's more of a statement. I'm more worried about my favourite rugby league team than most things. Yes, well, and of course, in this situation, we are talking about the Warriors. So you've probably got some good reason to be worried about them. Oh, great. We've actually just got something coming through the chat. So that's great. Okay, not a question, but just a comment. That's great. Okay, well, we'll bring that webinar to a close. I am really keen to get your thoughts on how you think this webinar has gone, what's worked well, what's not worked well. These are the first webinars we've done. This is the third one. I mentioned we did 2 yesterday. It is potentially something we'd look to do going forward as well. We are still learning the software, so we've had a few issues with that first poll that didn't go through, then apologies for that. But really keen to get your feedback really on whether you found this useful, what we could do better, what we did well. And yeah, hopefully we'll be back in touch with some more webinar options in the future. In the meantime though, any questions, again, just fire them through to me. I'm more than happy to talk about investment strategy, or if you are looking to sell the property, and basically want to just to bounce it off before you do, as I would recommend holding on to them where you can. Certainly happy to take those calls. I will bring it to a close now though, but look, just make sure you stay safe. Obviously it's a tough time out there. Stay safe. We will get through this. I think, as I said before, the government's doing a great job of actually leading us through this. From all accounts, New Zealand's doing very well compared to the rest of the world. So things will get better. It will take time to get better. But in the meantime, stay safe, stay well, and I hope you enjoyed the webinar. Thank you.